Yo, what is up, everybody? This is Vinny. I hope you all have had an amazing day so far, and I just wanted to make this quick little video to show you guys how you guys could have possibly top ticked the market and then bottom ticked the market, essentially catching the entire daily candle for today. And this is basically using my CVD, SMT, and standard deviation strategy. And if you guys haven't seen that video, I suggest you go take a look. It'd be very insightful. And I just want to give a little shout out to my boy Jaren on Instagram. He's really the one who made the videos about CVD divergences and really helped me in a way without even really knowing it. And I just want to give credit where it's due. But to begin, let's start off on the 15-minute time frame, and let's go find midnight opening price, which is right here. And basically, you just want to start drawing out your midnight deviations. So you're going to take it from this swing low all the way to the swing high. And then now you have your levels for the day. And so, as you can tell, you tap the negative 2.5, and then you tap this negative 2.25, and you tap the negative 2. So now once you get really close to approaching these levels, I want you to hop down to the lower time frame, like the 1 minute, and then look for some order flow confirmation. So if I go back and skip back into this time, if you do see this price right now, we have this high created on NASDAQ, and we have that same high created on the cumulative delta volume, or cumulative volume delta chart. And so basically what you want to look for is a SMT between the two. And then boom, check this out. You swept out this high on this candle, and on this candle you did not sweep out that same high. So as you can see, what this depicts is there is more aggressive buyers coming through. However, price on the NASDAQ is not reflecting all that effort. So what that means is there's some passive sellers up here within somewhere that it's forcing to keep the price down. So fortunate for me, I didn't take this trade yet because the market hadn't opened, and I did want a better fill. I was trying to get a fill within this 1 minute wick right at the consequence encroachment right here on this dashed line. But fortunately for me, once market did open and we shot past up, tapped the negative 2 level, and then right here, this basically would ultimately get rid of this SMT since we did just take out this high. So I deleted this SMT and deleted this right here. But since we did just tap this negative 2.25 and the negative 2.5, I did see this 1 minute CVD divergence where basically you set this high and then you didn't sweep out this high. But maybe it was for this one. Let's see. Let's go a little couple candles. You made this high right here. Do this. You have this high on the CVD, and you couldn't make a higher high than this on this candle. However, this high was taken out on that candle. So this would be my 1 minute time frame entry. I know it is kind of a little scuffed and it isn't as obvious as it normally would be, but this was my signal to enter for shorts, and I entered for shorts right here. And basically all it was just this negative 2.5 midnight standard deviation tap, and then it was a CVD divergence on the 1 minute. And then what you would do for next is now you would have to find your targets of where to set your TPs. And for me, that TP would have been midnight, because midnight opening price serves as a very strong draw on liquidity. And if you do not know why it is such a magnet towards price, I will make a video on that later, but it is called the open high low close and open low high close. And the theory is that you will have to retrace to midnight opening price at some point, and there's a high probability that it will touch midnight. So if we fast forward this, boom, right, I'm floating 1,000 in profit. I probably would move my stops to break even by now, just like this, and then just let this run, because we've taken out this low I believe if we set it to break even, I should be chilling. And so just let the price play out. And as you can see, we tapped the -1, had some hesitation there. And let's see if we tap the -2 and have some hesitation. Boom. There's a little hesitation. Tap the -2.25. Slight reversal. Boom. Tapped your midnight. And then what you would be looking for is once you actually tap these levels, you could possibly look for a reversal trade, right? For me personally, I took a step back from trading right here just because I was in class and I didn't have time to analyze the markets. But let's see it tap our -3.5 level. Boom, we've tapped this level just like that. And just like how we frame this trade up here, we're just going to frame it the exact same way. We're going to be looking for a low time frame entry. Hopefully that entry would be just based off of the CVD S&T. So what I see right here is that we have this low and we took out that low with this wick. Now if you look at the CVD chart down here, we have that same low and we could not take it out. So this is a sign that we are bullish and that there was not enough aggressive sellers, and there's too many passive buyers right here to force the price to go up. And I'm not the best at order flow, and I'm not sure if I'm explaining this entirely properly or as well as I should, but please do your due diligence to do your own research and to learn. I'm frankly new to order flow, but I use it to back up my standard deviation levels and it works out for me. So this may not work for you, but if it does, I'm happy to help. So now I would enter for longs right off of this level and put my stop at this low, and then let's see how much RR this would be. Okay, this is 16 point stop around there. And now you're just looking for targets. And so I would draw it from this swing low to this swing high, my standard deviation. On the 1 minute chart, looks like I can target midnight pretty safely, and even that -2. And then hopefully we can even target this -3.5. And if I fast forward, TP smash just like that. And draw a line across right there. Boom, TP smashed, get a quick reversal, and then right here you can even frame a low time frame trade as well, possibly looking for any CVD divergences again. So, and we do have that right here, just like this, where on NQ the price did not sweep out this high, and over on the CVD chart, price did not sweep out this. It did sweep out that high. So this would be your CVD SMT. If you enter strictly based off of that, you could possibly get this, but I don't personally like taking this, just because you've already taken out this high right here, and right here. So just seeing that we've taken this out, let's see how price reacts. Yep, just like this. So if you do draw a larger projection from this swing low all the way to this swing high, depending on what you do for the day, if you want to prefer larger or smaller projections, you can do whatever, or you can even stack the two confluences together. And what I see right here is that this -3.5 aligns with the -2.5, and then you can even target the -4. So that would explain these shorts that ran for 40 points, and you would just target midnight if anything. And then my next level that I would probably be looking at is this -3.5. I'm just going to delete this projection. But now you're just waiting for it to get tapped again. And let's see if we tap that. It looks like we're about to tap. And boom, we've tapped it. So just like earlier, how you traded the shorts or the longs, let's say you left runners all the way to this 3.5. Now if you were looking for shorts, you would just be looking for the same thing, a CVD entry, CVD SMT entry. And what that would look like is something like this. Okay, it is right here. Sorry, my mind was bugging out for a little bit, but you have this high, and then you have this low right there. Now, on the CVD, you have that same high, but you make a higher high on the CVD, and you obviously don't sweep out this high on NQ. That is your CVD SMC. That is your signal to enter for shorts. Again, for the third time or second time today. You sell this, you put your stops at the high. That is probably like a 7-point stop. And then where would your targets be for the rest of the day? If you draw your standard deviation, actually let me just do this. I will enter for a couple more contracts just to show you guys this trimming. And I would sell, I buy one back here. And basically I'm looking for my targets based off this 1 minute deviation, and I would trim 2 right here, and then I would say this 3.5 is a good draw, and I'll do 1, and I would just really leave a runner for the rest. So let's see how this goes. Bang, TP 1 hit. Now we have 4 runners. Boom. We're already sold off a bunch of our position. And then let's see if this 3.5 hits. Boom, 3.5 hits. Got that -4. And I would probably already have trailed my stop to break even. But I am trailing this last runner at every single swing high. And boom, stopped out. Just like that. You've traded the entire day. And then basically based off of this level again, it's literally just rinse and repeat, guys. It's like it's like a cheat code. You take this deviation, you draw it from left to right, because this move right here is way larger. So basically, if you did take this long based off of this CVD divergence, I wouldn't know if this is good enough because I'm still making this strategy, but it looks like we have a small CVD divergence right here. So if you took this long, which I probably would not take it because I'm done for the day, then I would take this, target this -2, stops at the low, and let's just see if this hits. I'll move it to break even by now, and boom, break even. The reason why I moved it to break even is because we took out this high. Normally whenever we take out highs and lows, I move this to break even. So for these shorts, once we pass this, break even. For these longs, once we move past this, I'll go break even. Same thing for these shorts over here. Once we move past these lows, I go break even. So it's really just like that, and you get what? Stopped out, break even. And yep, just like that. It's literally magic. And it looks like we were a bit early, because what I do see on the CVD divergence right now is, let me just delete this to make this a little cleaner, is that we have this low that we had set in earlier, and we did not sweep out this low. However, on the CVD chart, that same exact low was taken out on the CVD, and then you had another CVD SMT. Notice how this SMT pushes the price up quite a bit. It pushes it up, pushes up 34 points before it dumps back down. And then we have another CVD SMT just like this. The NASDAQ did not take out this low. That is your second CVD 1 minute SMT. And guess what? You've tapped this -2 area, and then that is basically another trade. This is your 100 pointer, just like this. Or maybe you got the entry over here after that CVD T right there. Stops at the low, you would have never gotten stopped out. Targeting this -2, and that's a easy 100 points right there. This is what, 86 points, 100 points, 131 points, and then this was 220 if you held all the way to that -3, or 250 or something like that. This is basically 400, 500 points in a day if my math is correct, and you caught the entire move from this top wick of the daily all the way till the longs. You really caught this all the way to the bottom, and then you caught the longs all the way to where it went up, and then you caught it all the way back down to where it dropped. This is how you can literally trade the market and ping pong it every single day, and it literally just repeats itself. Just keep keep your own mind nice and clear, and you will be safe to trade every single day, just like this. And I hope that I didn't ramble on too much, but if you guys have any more questions or anything about insights that you need on the market, I hope that this helped a lot, and